The property market, along with homeowners, have felt the impact of the elevated interest rate climate. We are joined now virtually by Buyers Trust head Jackie, who speaks to us about the implications here. Jackie Smith is with Buyers Trust, as I indicated. Not a stranger on this platform. Jackie, what are we expecting this time around? Many of us as mortgage holders are trying to cross our fingers.
Thanks for having me. Yes, it's exciting news when you hear that the interest rate's not going to go up, and we are hoping that it will stay like that definitely for the next 2 to 3 meetings, and maybe after the third one it will start going down. But as always, what we advocate is that when you're looking to buy a house, make sure that you're ready to buy a house and make sure that you have saved a deposit for a house, that you've got the cost ready so that you're not surprised in terms of what you have to pay out. And just prepare.
So where do you even start in the current economic climate that has been tough with the rising cost of living on the part of saving? We don't know as yet what the trajectory is likely to be with regards to the monetary policy tightening as a tool that is used by the Reserve Bank. But many South Africans have indicated that there really isn't too much left over from their disposable income. And when we speak of big ticket items such as saving for a home or acquiring a home loan, that is a marriage of partnership between maybe 10 to 20 years for most people.
Absolutely. That's why we say start small and start early. So, if you want to buy a house, we recommend that you start saving probably for a deposit about 3 years before you really want to buy a house. There's this myth that says, you can only save if you earn a lot of money, which is absolute nonsense. Start small and start early. You know when you want to buy a house, set your goals, have a defined goal. If you know it's going to be in 2 years, or in 3 years, start small and start early. Reassess your spending, like anyone will tell you. Just make sure that you're not spending unnecessarily. And then be consistent in terms of your savings. Automate your savings. Be in, set up a debit order so that every month it's coming off your account. If you look at a 3,000 Rand a month savings, if you put that in an interest-bearing account over a 36-month period, you could have 120,000 Rand, which is a sizable deposit for buying a house. So set your goal, start small, start early, and then be consistent, and also make sure that you put your money in you maximize your interest earnings on your savings.
Lastly, Jackie, what's to be said about factoring in the fluctuation of interest rates with the deal that you get into with a lender for a mortgage? The reason I ask this is that many South Africans who play in this space then ask about the strength of longevity and making sure that you have the enough fiscal power to continue with this particular structure of a home loan.
Yeah, so most banks look at putting in a buffer to make sure that when the interest rate goes up, that they are, the homeowner is protected, and that in an increasing interest rate environment, they will still be able to afford the bond. But that's why we seriously advocate that if you are able to put in a deposit, immediately it reduces your installments, it takes some pressure off you so that when the interest rate does go up, you are able to make that switch easily. You've got that equity in your house. But always try and put an extra little bit aside or pay a bit more so that when interest rates go up, you are in a position to afford your home repayment.
Thank you for your input. As always, Jackie Smith is the head of Buyers Trust as we continue to preview the expected outcomes of the Monetary Policy Committee meeting of the Reserve Bank later this afternoon.